T Rowe Price is an investment management firm that provides a broad array of mutual funds, advisory services, and retirement plans. But this is not a video reviewing their product offerings. Instead, we will analyze the actual business and stock of T Rowe Price. T Rowe stock has fallen over 33% from its all-time high, and I think offers an attractive opportunity in today's market. The company is a financial powerhouse with fast-growing earnings and free cash flow. On top of this, they pay a reliable growing dividend with large special dividends scattered over the last decade. In this video, I'm going to provide a comprehensive overview of T Rowe Price's business and explain why I think it could be a great addition to your long-term dividend stock portfolio. My name is Zach, and you should leave a like and subscribe to the channel if you enjoyed the video. You should only invest in businesses you fully understand, so today I'm going to provide a full picture look at T Rowe stock. First, let's recap the company's history. In 1937, Thomas Rowe Price Jr. founded T Rowe Price & Associates in Baltimore, Maryland. He started his finance career in the 1920s as an entry-level researcher and account manager. Working at Baltimore area brokerages, he grew to dislike the sales-oriented operating model these firms had. When Price started his firm, he diverged from the norm in three major ways: charging fees based on assets under management rather than sales volume, actively managing his clients' accounts strictly as a fiduciary, and investing in long-term growth stocks. The firm had humble beginnings, managing private investment accounts for Baltimore area families throughout the Great Depression and World War II. It was a slow grind, and the company struggled through its early years. The partners accepted irregular salaries and exchanged actual pay for shares in the new enterprise. Price's wife actually had to use her financial resources to help bankroll many of the firm's early losses. Luckily, by the late 1940s, the firm's momentum began to pick up with winning stock picks in Abbott Laboratories, 3M, and IBM. By 1950, T Rowe Price recorded its first full profitable year, got its first institutional client, and launched its first mutual fund. This was the T Rowe Price Growth Stock Fund, which eventually became their flagship product. By 1960, Price opened a second fund named the New Horizons Fund. In 1969, they launched the New Era Fund as a response to the rapid inflation Price predicted would dominate the 1970s. The following year, founder Thomas Price officially retired from the company. Price has a significant legacy in the field of investing and became known as the father of growth investing. By 1986, the company grew to 17 funds and had its initial public offering, beginning to trade on the NASDAQ as T Rowe. T Rowe Price has continued to evolve over time, making acquisitions and offering funds and services all around the globe. So what does their business look like today? The revenues largely depend on the total value and composition of their assets under management. Therefore, fluctuations in financial markets and in the compositions of their assets under management will impact revenues and results of operations. As of December 31st, 2021, T Rowe Price has $1.687 trillion in assets under management, including $871.4 billion in U.S. mutual funds, $437.1 billion in sub-advised funds and separately managed accounts, $343.3 billion in collective investment trusts and other T Rowe Price products, and $36 billion in private investment funds from CLOs. The acquisition of OHA, completed on December 29, 2021, included $57 billion of capital under management, of which $46.9 billion of fee-based assets under management are included in the assets under management as of December 31st, 2021. Here you can see all their distribution channels and products. Additionally, you can see a large breakdown of their product categories. They do basically everything you can think of when it comes to investments, but U.S. mutual funds is their core business. Assets under management increased $217.3 billion throughout the fiscal year 2021. This increase was driven primarily by market appreciation and income, highlighting a massive tailwind behind the company. They can organically grow their assets under management through making successful investments and creating funds that perform well. This has a downstream effect of increasing the company's earnings since their primary revenue is through charging fees based on assets under management. So in the simplest form, the larger the value of their assets under management, the more they'll make. However, not all is sunshine and rainbows. T Rowe Price faces a significant risk of competition. For example, passive-oriented investment strategies have grown dramatically in popularity. This is a method of long-term investing where you minimize buying and selling, often through securities that mirror the indexes. The SPY ETF, which mirrors the S&P 500, is widely popular and it tends to perform as well, often better than T Rowe Price's mutual funds. On top of this, the fees or expense ratio is far lower. SPY has an expense ratio of 0.09%, while T Rowe's growth stock fund, for example, has an expense ratio of 0.64%. That may not seem like a lot, but when you think on the span of decades, those expenses compound and eat into your total return. Besides the rise of index investing, many people will manage their own portfolios. This is what I do as an investor. As a result of these trends, such products have taken market share from active managers like T Rowe Price. However, T Rowe Price can still be very successful and grow its assets under management. Their recent performance has been great. I'm going to take a deep dive into the financial metrics of T Rowe stock and explain why I think it could be a great buy in today's market. But first, a word from our sponsor. This video is sponsored by NordVPN. NordVPN encrypts your web traffic and allows you to change your IP address. This means that you can browse securely and access region-locked content. If a show, movie, or game isn't available in your country, no problem. Just change your virtual location and access it. It's very easy to use, connect with one click, or enable auto-connect for zero-click protection. You can open it up on your computer or phone and select from around the globe. This service actually helped me debug a connection issue some international users were having when using dividenddata.com, the web app I created. NordVPN is extremely useful and I recommend it. Go to nordvpn.com/dividenddata to get the 2-year plan with an exclusive deal plus 1 month free. It's risk-free with NordVPN's 30-day money-back guarantee. Now let's get back to the video. Let's take a deep dive into the financial metrics of T Rowe stock. To do so, I'm going to be using my own research software available at dividendddata.com. T Rowe Price is currently valued at $33.92 billion with 227 million shares outstanding, giving it a price per share of $148.92. We can see that over the last few months, T Rowe stock has fallen significantly. We'll talk a little about why this happened later in the video. We can see that the non-GAAP earnings per share has grown rapidly. This is a strong indication of what a financial powerhouse the company is. If we look at the revenue, you can see it's growing at a high rate. The revenue per share has grown at a 14.68% 5-year compound annual growth rate. It's also a 12.24% 10-year CAGR. This is very impressive growth. The net income per share has grown at a 22.6% 5-year CAGR and 16.31% 10-year CAGR. This is very impressive. If we look at the annual net income per share, you can see that the fiscal year 2021 generated $13.71, which is a 10.93 PE ratio at that time. That's an earnings yield of 9.15%. This is a great valuation given historical growth rates. Free cash flow per share is much of the same story. Massive growth and a great free cash flow yield. T Rowe Price has net margins of between 35 and 40%, which is very strong. If you think about their business model, it allows for scalability and margin expansion. Their shareholder equity continues growing and they have negative net debt. These financials scream that T Rowe Price is a well-run company. Their management is shareholder-friendly as well. They've bought back shares consistently over the last decade. This means that your ownership stake in the company is increasing. On top of this, they pay a fast-growing dividend with large special dividends periodically. Over the past 5 years, the compound annual growth rate of the dividend is 14.65%. They just had an 11.11% quarterly dividend increase to $1.20 per share. You can see these special dividends as well. In July 2021, they paid a $3 per share dividend. Their forward-looking annual dividend is $4.80, which gives it a 3.22% dividend yield at current current prices. With this growth, this seems like an attractive opportunity. The dividend payout ratio is sustainable in the mid 30%. T Rowe's financial metrics are quite impressive. So why has the stock fallen over 33% from its high? Well, one factor is the broader market has declined over the past few months. Particularly, growth stocks have seen the biggest market decline. This happens to be one of T Rowe Price's biggest areas of focus. Let's take a look at the performance of some of their funds. PRGFX, the T Rowe Price Growth Stock Fund, has fallen 27% from all-time highs. PRGTX, their Global Technology Fund, has fallen over 50%. PRHSX, their Health Sciences Fund, has fallen 20%. Not all of their funds have performed this poorly, but there's definitely been some duds. PRDGX, their Dividend Growth Fund, is only down 5% from all-time highs. A decrease in the value of their funds will decrease their assets under management, decreasing their revenue from fees, meaning lower earnings for T Rowe Price, the company. So 2022 Q1 earnings are likely going to be a sizable drop-off for T Rowe. However, this may not mean much over the long term. The biggest risk to T Rowe Price is their revenues rely on market value and composition of their assets under management, all of which are subject to fluctuation caused by many factors outside of their control. So if we go into an extended recession or bear market, this would negatively impact the company's earnings. Also, the poor performance of their funds relative to alternatives could lead to loss of clients, decreasing assets under management even more. This could happen suddenly too, since most of their business is US mutual funds that could be sold without cause and on short notice. So when you think about investing in T Rowe Price, you should consider these questions. What do you think the market will do over the long term? Do you think investors will continue to trust T Rowe Price mutual funds? Do you think the company will continue to grow assets under management? Although I prefer to manage my own investments, I think many investors will choose to have an actively managed fund like T Rowe Price. As I mentioned earlier, there are massive tailwinds behind the growth of assets under management. It will keep compounding as long as the market performs decently and they retain clients. So given the recent decline in T Rowe stock, I think this is an attractive opportunity to buy the company. I currently don't own any T Rowe stock, but will be looking to add it to my long-term dividend stock portfolio. However, don't take my advice blindly and be sure to do your own research before making any investment decisions. Thank you for watching Dividend Data. I greatly appreciate if you could leave a like and subscribe to the channel. You can sign up for dividenddata.com to use this software and join a Discord community of like-minded investors. If you follow me on Twitter, link in the description, you can get real-time updates of my buys and dividends coming in. Please leave a comment below and thank you for watching.